You know, the market today, sometimes it seems dull on the surface, and then there's a lot of action beneath, and then sometimes it seems dull, and it's simply dull. That was the case today, I got to tell you. The market, really marking time, right? It listened for economic and interest rate clues today from Janet Yellen, and we're waiting on that British exit vote. So what is the true health of our economy? And the bigger question is, how does it get better? Joining me now, Morgan Ortagus, David Nelson, and Peter Morici. Peter, let me go to you. You've been pretty upbeat on the economy. I couldn't necessarily say that Janet Yellen was as upbeat today, particularly when it came to jobs.
Well, she's looking for an excuse not to raise interest rates. My feeling is the economy is very healthy, and we're looking for a summer of good news on the economy. Whatever the British vote, if they vote to leave, there's going to be some turbulence following it. Long term, it's going to be good for Britain, but the U.S. economy is going to have a very good third quarter.
David Nelson, you agree with that?
Wow, that's a big statement coming from Peter, and I like Peter a lot. So I'd love to see that. I thought the testimony, though, was pretty dark, even dark for Janet Yellen. I thought she was very cautious with her words. She seemed to parse her words very carefully, especially around Brexit. You know, she seemed like she wanted to be not politically incorrect there, and I was kind of struck by the somber tone. I think the 80,000 jobs that we're getting on a monthly basis the last couple of months, I think that is an average.
That's definitely tempered the Fed.
That's tempered the Fed, and it's kind of changed the dynamic pretty closely.
The word to me that stuck out to me most is how many times she said uncertainty. And as you and I were talking earlier on Fox News, this is the same word that you hear from executives, from CEOs, and what you hear from small business owners is how much uncertainty is in this economy. And the fact that the Fed chair said this multiple times today just shows, again, how somber and cautious she was. I think that I disagree with your guest because I think the Brexit vote, if they do vote to leave, it's going to be more than just a temporary blip for the markets. I think that this represents a fundamental shift of how UK voters want their country to behave.
Markets and economies, though, two different things, Morgan.
Sure.
We could have upheaval in the markets, the financial markets, but does it mean anything to the economies? I mean, if Britain says we don't want to be part of this club anymore, tourists aren't going to change their minds, hotel reservations won't be canceled, and trade should go on as it already does.
I agree with that. I would say more from a foreign policy perspective. This is Russia's dream, right, for a broken EU. Russia has been meddling within the EU and would love not to have a united EU when it comes to Iraq, when it comes to Syria, when it comes to the Iran issue, whatever you go on. So I think I agree with you that from an economic perspective, the country was around a lot longer before the EU. They'll be around afterwards. But from a foreign policy perspective, it is really going to shake up how our nations work together.
Do we really think it's a black swan event? Because everybody's looking for the next black swan, and by definition, a black swan event is unknowable.
Yeah.
I think we talked about this last week. We were talking about the possibility of this even being just a Y2K kind of event where we wake up the next day and everything's okay.
Yeah, Peter Morici, with your strong third quarter economic outlook, does that mean you're factoring in a yes vote in Britain and also jobs getting back over 200,000 a month?
I don't think it matters which way the vote goes in Britain in terms of the economy. I think there'll be some market turbulence if they vote to leave. However, if they do, then a lot of European money will come to the United States, boosting the market. In terms of the U.S. economy, we are going to go through a period where we grow at about 2.5% a year, but we don't generate the kinds of jobs you'd expect to accompany that because of all the technological breakthroughs that we're about to embrace and the fact that the government is making it more expensive to hire people, you know, with minimum wage laws, Obamacare, and so forth. All of this is adding up, and the technological opportunities to substitute for capital for labor are really quite profound. It doesn't mean a period of huge capital investment because a lot of these things are quite economic to use. Just consider one last thing I'll say in conclusion. Driverless cars. What happens to all those drivers?
Yeah, I think truck drivers are the #1 job in 29 states. Guys, let's leave it there.